Good
Afternoon.
afternoon. Today we're going to have a special webinar on capital gain tax. So let me introduce myself. My name is Ko Teck Peng. I'm the Group Principal of KTPs. We are Group Auditors and Tax Agent in Johor Bahru. With me is my Client Relationship Managers. She is Ms. Lim. Okay, you don't want to introduce yourself, I think.
Hello, good afternoon, everyone. I'm Ms. Lim, Client Relationship representing KTP and THK.
I think 2024 is a special year, okay? Special in the sense that there's so many new things, new tax coming out, okay? One of the new tax is capital gain tax, okay? It is new tax, so that's why today the objective of the webinar is to share our knowledge on capital gain tax as at today, okay? So first question, what is capital gain tax, okay?
Capital gain tax actually is a tax to be imposed on gains arise from disposal of capital asset. So from this definition, you can see that there's two major keywords. One is the word dispose and another word is capital asset. So from here, we define the word dispose. It actually means to sell, to convey, to transfer, assign or settle whatever shares in the company. Then as for capital asset, it was defined as a movable or property or immovable property, including any rights or interest in the company.
Okay, I think the scope of capital gain tax, in short, we call it capital CGT, okay? CGT, we will come back later, okay? I think before we proceed, let me introduce, in Malaysia, generally speaking, we have two tax. One is Income Tax Act, one is Real Property Gain Tax. I think we are familiar with Income Tax Act. I think most of the individuals or most of the companies, Senibrahat, Enterprise, and the LLP, they have filed their income tax. Yes. I think Real Property Gain Tax comes in when you dispose of the landed properties. So the new tax is mainly cover on, strictly speaking, the first criteria is, the first scope is unlisted shares in Malaysia. We'll come back later, okay? We'll come back later. Okay, what is the effective date?
The effective date of this CGT actually is announced effective from 1st January 2024, meaning early of this year. And then they granted exemptions for the period of 2 months, starting from 1st January until 29 February 2024. So any executions of this disposal of shares commence from 1st March 2024 will be the effective date for this CGT.
I think basically, it started this year.
Yes.
Government is very linear, government is very generous. 1st of January until 29th of February is tax exempted period, okay? With effect from 1st of March, the new tax come in already, okay? So who is liable? Most interesting because we have a lot of Senibrahats, things like that, and on and off they transfer of shares. They're very curious, and then shareholders very curious, very kanchiong, whether normally they will ask, am I gonna use new tax or not? Okay, please.
Okay, so who is liable or chargeable to this CGT? Actually given four types, four chargeable person. One is entitled to the companies, then limited liability partnership, in short we call it LLP, followed by trust body, and the last one is the cooperative society. These four entities who dispose or transfer any rights of the share will be the chargeable person for this CGT.
So first, we have 4 categories. The 4 categories did not mention individual.
Correct.
So individual is not under the preview of CGT. Okay, I repeat again, straightforward, companies. It can be Senibrahat, it can be Berhad, LLP, trust bodies, cooperative. Okay, So what is the scope? I think this is interesting, right? What is the scope? Okay, if I mention, the first one is unlisted shares of unlisted company incorporated in Malaysia. Okay,
Yes.
so second and third, I think I leave it to Ms. Lim.
Second is the shares of a control company incorporated outside Malaysia and that's own a real estate located in Malaysia. This is the second scope, but this one will be cover akan datang. Will be stay tuned for upcoming webinar for this shares for control company.
The third one?
The third one.
The third one is interesting one. Is a capital asset situated outside Malaysia, remitted into Malaysia. Okay. For today webinar, we will concentrate on the first one, share of unlisted company. Okay. The second and the third one, we will leave it in the next coming webinars, which is more technical, which is more susah to understand, put it this way. Okay? Okay?
Okay.
So interesting, how are the disposal and the acquisition date, the dates to determine, okay? So how to see the date?
First of all, there was two dates to take note to be determined. First one is the acquisition date, and then according to the guideline, the acquisition date is deemed to be coincident with the disposal date. So we have to really look deep into the determinations of a disposal date. So from here, you can see the disposal date, how you determine it. So we have to see there's two scenario. First one is with any written agreement or without the written agreement. So first scenario, if with written agreement, meaning the date of the agreement will become the date for determine the date of disposal. And then for the without any written agreement, the date of completions of the disposal. So the date of completions of disposal, it defined is either the earlier of the date of transfer or the consideration price have been paid, have been settled off. Yes.
So let me recap what Ms. Lim has said, that basically you look at the first criteria is always agreement.
Yes.
Basically when you dispose of shares, normally in nutshells agreement comes.
Correct.
But sometimes Malaysia, SME, especially SME, there's no agreement. So they will look at transfer of shares or proceed considerations.
Correct.
Right?
Yes. These two criteria.
I think it's clear cut. Okay. How is the disposal price determined?
One word, consideration price, which is equivalent to market value.
Okay.
Market value.
I think the law make it very clear is sometimes when there's a connected transactions, meaning transfer of shares between directors or spouse, thing like that, the market value will come in. Okay, so this is normally is when the disposal is not on arm's length, whereby, as I mentioned before, disposal between connected persons.
Yes.
By way of gift or something like that. Okay. In nutshells, dollar and cents. Okay.
Yes.
But you always need to take care the arm's length.
Correct.
Because your price may not be IRB prices, or your arm may not be
the
IRB
IRB
arms, thing
Yes.
like that. Okay.
So there's a valuation method as well, because you will take in the net tangible assets, which the formula is simple, whereas the total asset deduct the non-tangible asset and deduct the total liability.
I think this is in line with stamp duty, right?
Correct. LHDN
IRB asset
stamp duty.
computation. Okay.
Yes.
So we move to the next one. Sometimes disposal may not yield profits. Okay. When there's a situation, the losses. Okay. Okay. How to treat the losses under the CGT?
CGT, it basically divide to three parts. The first one is the consideration for disposal. The second part is less out the considerations for acquisitions, followed by less out any incidental costs on the disposal of acquisition of the shares. So in the considerations of disposal, basically actually is a money or the value. You less out any cost incurred in enhancing, preserving the value of the assets, defending the titles or the rights of the incidental cost to be disposed. So this one is part one, the consideration for disposal.
I think in a nutshell, it's very simple. Okay, purchase price minus off your disposal price minus off your
incidental costs.
Okay, so it will give you a gain. Okay,
correct.
So that's why I asked the question is how's the losses? How are you going to account the losses?
The losses any unabsorbed losses can be carried forward for a period of 10 years.
10 years.
10 years.
A lot, okay.
Yes, quite a long time.
Okay. So interesting. Once you have a gain, what is the tax rate under the CGT?
The tax rates of the CGT is divided into two periods of time. One is before 1st January 2024, where the rate is there's a two rate to take into consideration. The A is 10% from the adjusted income, or part B is 2% from the gross proceed from the disposal. This one is happened before 1st January 2024. Another one is after, means from 1st January 2024 is a 10% from the adjusted income.
So basically it's very simple. All the gains will be subject to 10%. Okay? Special considerations given is before
1st January
of 2024. Okay?
Yes.
Because this is the date before CGT comes in. So it will be 2% of your sales considerations. I think which one is preferable to taxpayer? Normally I would say is that 10%. I'm not sure, it's up to the taxpayer to decide.
Yes.
Okay, the last one. Okay, when you dispose of unlisted shares in Malaysia, okay, definitely you need to inform the secretaries. Once the secretary is informed, then next is the tax agent will come in.
Yes.
To do and file the tax returns. I think the tax return is it's a new form.
It's totally a brand new form.
It's a new form. So it's a new form which can be downloaded in IRB website. Okay. So how long it need to be filed into income tax department?
The filing deadline is within 60 days from the disposal date. And then it will be done via e-filing, no longer manual form. And also the payment. Yeah, the payment also have to be made within 60 days from the disposal date.
I see. So basically, in Malaysia, everything is e-ready. Okay?
Correct.
Meaning everything is done online. Okay? You have 60 days to file your returns. You have 60 days to make the payments. Failure to do so, penalty will come in, right?
Definitely. Yes.
So if this, I think more or less we have covered the essential part of CGTs. I thank you, Ms. Lin.
Thank you, Mr. Kong.
Before I wrap up everything is that when you have a disposal of shares, unlisted shares, please inform your secretaries. I think by now, secretary will know the impact of CGT, they will inform the tax agent to do and file the tax returns.
Right.
Right?
Yes.
Okay. Thank you very much. Thanks for your time.
Thank you. Thank you, Mr. Ko. Thank you, everyone.